If there's 2 days are around about same volume, then it's really difficult to break the. I don't know how to explain this. What's up guys, I'm Dexter. So recently I've been getting a lot of questions from beginners. If I have a $500 account or $1,000 account and I couldn't really apply for a margin account to be able to short, how do I really trade one specific patterns to slowly grow my account? So today I'm going to list a couple criteria and conditions that could help you avoid getting faked out and be able to get the massive risk reward. So let's get into the lessons. So recently we do have a really hot month, and overall we did have a couple multi-day breakout and a couple fake out as well. A lot of people are really confused about, well, in what type of condition should I really try to buy the breakout? Now, buying the breakout is without any type of analysis on float, market caps, and news. So those three conditions should give you a decent idea if the stock is bullish or bearish on current day. Let me give you an example. So AIM, first I'm going to look at multi-day breakout. First, the thing I'm going to look at will be the float and market caps. The bigger the float, the more supply there will be. And if there's not that high demand, the stock won't really move that much. Second, I'm going to look at will be market caps. Now, the bigger the market cap is, the harder for it to move as well. As I introduced the concept a couple videos before, if you have $100 million and you can make a $100 million stock move about 100%, but you can't really make a $1 billion market cap stocks to move 100% unless you have a $1 billion cash in hand. So those two conditions are the priority I'm going to look at before I even consider to really trade on the chart. Now, thirdly, you want to look at the price condition. So in penny stock areas, the more expensive the stock is, the harder for it to try to break out. Not many people have that much money to really buy a really expensive stocks, especially when the stock is around $10, $20, and $30 per share. Unlike AIN, it's around $1 per share. A lot of people love to trade this type of stocks. First, it's cheap. Second, it can buy a lot of shares. Third, if it really tends to spike, you can get a lot of risk reward. And they have a good upside potential. Once you finish looking at float and market caps, you want to take a look at the yearly charts. Now, what type of resistance does it have? Does it have a heavy resistance? Is it a consistent downtrend charts? And all those are plays into the factor of this type of multi-day breakout. Now, first of all, when the chart is consistently downtrending for a while, for a couple of years, the first green day is extremely bullish once it gets high amount of volume. This is considered as the first green day, traded about almost 40 million shares. So typically when you're trying to anticipate the first green day, you can go long because there's going to be a high demand and the flow is tiny. You can get a decent risk reward from it. But when you're trying to long overnight, well, first you are trying to risk that potential overnight offering. Secondly, you are trying to risk of tomorrow is definitely going to trade more volume compared to the previous day. Now, 40 million volume is considered a decent amount of volume. There's about only 20 to 30% chance that it will trade more volume in the next day compared to 40 million share traded on AIM today. When I look at the volume, if the volume is extremely high, over 50 million, 60 million, then tomorrow is unlikely to trade more than 50 million or 60 million because for the stock to go up, in the next day, it needs to trade more volume compared to the previous day. So if there's only about 20 to 30% chance that will get more volume compared to today, then I would definitely not try to hold overnight because even if the stock is likely to trade more volume tomorrow, there's still a potential offering on penny stocks. And these type of offering are deadly on penny stocks. If you're trying to hold overnight, it can drop about 60 to 70% in one day. So in conclusion about this ticker, overall, first of all, you want to look at the market cap and float. Secondly, you want to look at the long-term chart. If it's consistent downtrending and the first day getting a decent amount of volume, it's extremely bullish. It's unlikely to drop. Now, secondly, we are trying to look at a multi-day breakout into a different type of chart, something like this, right? When you are seeing the charts trading massive amount of volume in the last couple of days and the first day trying to break out of this tip, right around $360 area. In this case, you want to go into the intraday chart, like what is going on into all those volume traded on that specific day. Go back to the monthly charts. You can see that every time when you're trying to break this $4 area, 350-ish, trying to break out, gap down, trying to break out, gap down again, trying to break out, gap down. The more you try to test, the more backorder will form. And it's harder to really, for the stock to try to break out of that area. Now, as you see, every single afternoon, there was a huge spike, but every single morning after that afternoon, it gaps down. So when you're trying to trade on this specific day and you see there's a potential afternoon breakout, it broke every single resistance, And the chart behavior already told you 3 times, do not hold overnight because there will be a potential gap down. At the market open, it did gap down. Charting behavior is really important factor for you to try to look at the long-term chart, trying to make a judgment call from all those volume that traded for the previous couple months. AIM and CODX, they are completely different multi-day runners and they're completely different multi-day breakouts. This case, studying charting behavior will try to prevent you from getting faked out and trying to help you not taking that negative 20% gap down into the next day. So lastly, let's look at NNVC. This ticker has been running for the last, I would say, overall a month. It's running from the coronavirus based on studying vaccine. And this ticker, they announced multiple vaccine news for the last couple of years and tried to help up the stock and in order to do a potential offering. In this case, he did offering once. Overall, the hype is still really strong. And the multi-day breakout already happened from right around here. So he did an offering and the stock slowly comes back and start breaking into this resistance. Now, first of all, when you're looking at multi-day runners, first one will be market cap and flow. It does meet the criteria. It's a decent amount of flow and relatively small market caps. When you're looking into the breakout volume has to be much higher compared to the previous day. Take a look at this volume traded. The first day traded about 10 million, second day traded about 30 million. So this day volume is larger than the previous day. Now on the third day, it's trading about the same amount of volume compared to the previous day. In this case, it tells you that stock is trying to get more volume, but it really couldn't break the previous day. So potential gap down will actually happen on the fourth day. So when you're trading into multi-day runners, always take a look at all the volumes together and what day by day, because if there's 2 days are around about same volume, then it's really difficult to break the I don't know how to explain this. So by looking at this type of multi-day runners on NVC, first green day traded about 4 million, second 5 million, but it did a potential offering, so that doesn't count. And you can see the volume is getting more and more compared to previous day. And in this day, it traded barely among the same type of volume on January 24th. So it's unlikely to trade more volume than 30 million because on this day, it didn't really break the previous day volume. And the stock already tells you that it started to show weaknesses. So in this case, if I'm trying to go short, I don't really want to short into a massive amount of volume day. I want to try to short on the day after that has less amount of volume. But also as a long trader, you don't want to really hold overnight if the stock is reaching maximum volume. If it starts to losing volume compared to the previous day, then that's where it tells you you should start exit the stock because the stock is already reaching the maximum potential. So overall, all those 3 tickers, they have a different types of multi-day breakout. AIM was a consistent downtrend chart and it's holding around that $1. It's pretty much the really ideal multi-day breakout compared to CODX and NNVC. NNVC is relatively expensive. CODX has too many fake out for the past couple months. And for me to be selective and what do I want to trade, I will be selecting AIM. Not really considering fundamentals just by looking at the chart. AIM is probably the most ideal trade that you can make as a long trader. So that's pretty much it. That's overall the 3 conclusions for multi-day breakout. As a beginner, don't always rush into the breakouts because if you buy and hope and don't really look at other conditions, you will likely to perform a fake out and you will likely to lose more money because that's where noobs trying to buy the breakout and they feel more emotional because they did a fake out and everybody try to sell at the same time. You don't want to be that type of person and you don't want to be that type of people making the same mistakes. Always zoom out for the bigger picture. That'll be it for this video. Thank you very much. I will see you guys in the next one.